Mark here with a little elephant wisdom for the day. Let's talk about how to trade different time frames and some basic differences you want to keep in mind when doing so. Low time frames, or LTFs, are very quick moving. So talking about, say, the 1 minute chart up to the 4 hour chart. People have different opinions regarding what constitutes a low time frame. I personally think anything under 12 hours is low, but we'll consider up to the 4 hour chart here as low time frame. These charts are telling you what is happening fairly immediately, within a small window of time. Remember, every bar on your chart represents the time frame you have chosen. High time frames, or HTFs, are the opposite, so talking daily, weekly, monthly type charts. These look more at the big picture and overall trends. We'll get right to the number one rule when trading time frames, but first we'd love if you join our herd and like and subscribe below. We hope to be a part of your crypto journey as we share our hard-earned wisdom. So here's the simple number one rule when trading time frames. The length of your trade should match up with the time frame you are trading. The lower the time frame, the quicker you are entering and exiting your trade. If you're trading off a more high time frame chart, these would be trades you would look to hold on to much longer before exit. For example, if I'm trading on a 15-minute chart, I'm looking to get in and out of the trade very quickly. It could be minutes, hours, same day most of the time. If I'm trading on a high time frame chart, I'll plan on holding for days, weeks, longer term. Time frames also work together to help you understand the trend in both the short and long term, and where you may see a deviation from the trend. Most successful traders tend to look at charts from big to small. So I'll look at the monthly chart to see what kind of overall trend we've been in and are currently in. Then I'll check out the weekly and the daily, drilling down to see if trends on the lower time frame match the trends for the higher time frames. And if not, at what point do they start diverging? Let's take a quick walk through the Bitcoin timeframes. The weekly shows an overall uptrend as higher highs and higher lows have been formed, which marks an ascending channel. Traders are very much hoping that this $40,000 to $41,000 level holds, marking a higher low, which would sustain the longer term uptrend. That's why you see a lot of people concerned currently regarding this level. The daily shows the same thing with a little more action. Remember, the lower the time frame, the more you'll see the smaller changes. So we've seen a nice reaction to that $40,000 to $41,000 level, bouncing up to about $43,000 and currently back retesting around $41,600. The 4 hour, you can actually start to see a bullish ascending triangle forming, as long as these current levels hold. This is one of the reasons some are already calling this the bottom. So you can use different time frames to confirm trends as well as see possible reversal patterns forming. When you become more proficient at charting and finding and trusting your indicators, distinct levels in the charts will develop. These are the support and resistance lines that frame your trades. But remember, support is only support until it's resistance, and resistance is only resistance until it's support. So while these levels present good entry and exit points, nothing is foolproof in this world. Big moves develop off these levels. You don't have to get it perfect, but you do need to know where the levels are and then be able to perhaps switch your bias in order to meet what the market is telling you. Always remember, the market is the author, you are the reader. Okay, herd, until next time, thanks for listening and sharing in our elephant wisdom.